right, let's turn our attention to budget expectations. We're just 1 week away from the union budget and expectations are very high this time round. Let's focus on what the middle class, what the taxpayers expecting from the budget this time round, reeling from high inflation, high cost of living and the effects of COVID restrictions, the economic impact that that's had. In fact, when most employees are also working from home, one of the expectations is additional costs for mobile and internet, and there be a separate tax deduction towards the home office's expenses. In fact, among the other expectations, a hike in the ATC limit is also what is being expected, a hike in the standard deduction. But let me bring in Abhishek Rastogi, who's joining us on the broadcast here for more perspective. Thank you so much, Abhishek, for joining us. Obviously, the middle class has faced a huge brunt of the pandemic in more ways than one, with the high prices and the rise in the cost of essentials that have been happening. What is your own expectation of what we can look at this time round from the budget specifically for the taxpayers?
I think you have summarized it quite
well. Abhishek, I think you're on mute. If you could unmute yourself, please. All right, I think we're just going to try and get that audio line sorted out. We'll just try and get back, Abhishek Rastogi.
Hello.
Those are some of the expectations here. Remember, the tax benefits, we'll have to wait and see whether that does in fact come in. Abhishek, is my voice reaching you? Can you hear me?
I can hear you very well. Am I audible?
Yes,
Hello?
Please go ahead.
Am I audible?
Yes, please go ahead.
I think you have summarized it quite well. The middle class income group is facing a lot of these additional costs these days. I think both on the direct tax side and on the indirect tax side, we need to look into how benefits could flow to them. Rightly, so what you have put is that there are additional costs. These are additional internet costs, consumption of electricity at home, certain pantry-related expenses which are being incurred at home. So I think there is a need to reconsider the standard deduction or increase that by way of those salaried class of people who are working from home, because their cost of operating from home has increased. And I am not counting about the additional space which they are using today, either for storage of files and so on and so forth. So rightly, that deduction must be looked into, and we hope that the finance minister will look into that aspect on a very, very serious note. But I think talking about other things, if we talk about the basic exemption is for 5 lakh rupees to the extent of 5 lakh rupees. But the moment your income increases 5 lakh rupees, then the exemption is only to the extent of 2,50,000 rupees. So I think the middle class income group will be looking for a blanket exemption till the level of 5 lakh rupees, so that there is no tax till the amount of 5 lakh rupees. So for those middle class income group people who would fall, let's say, between the income group of 5 lakh rupees to 6 lakh rupees, if the blanket exemption comes till 5 lakh rupees, there will be no tax on that. And that will be very, very welcome move by the government in such a COVID situation. Now, also, we have seen in the past that the corporate tax rates have decreased, have stabilized. But if we see a lot of these MSMEs and mid-sized players they work on a partnership model or an LLP model, which is still taxed at a very high rate of 30%. So if a partnership firm even earns 1 lakh rupee, they will have to shell out 30% tax on that. So there must be some exemption limit or the basic threshold exemption limit, even for those entities which are operating as an LLP or as partnership firm. That becomes a question mark that needs to be seen, that how this benefit could flow. I think another aspect is with respect to certain deductions which are given to the professionals. These 50% deductions which are given to lawyers, chartered accountants and other professions, so that you could claim deduction to the extent of 50% of your income without claiming the benefit of expenditure or booking expenses or depreciation. I think that limit of 50 lakh rupees, it is hoped that that limit is relooked now, that limit is 50 lakh rupees for a long time now. That limit certainly has to increase. Certainly, if we see these limits to the limits which have been given to traders, where that limit is 10 crore rupees. And where most of these transactions are digital transactions. So I think from that perspective, middle class income group expects that change to happen, would expect that deductions for professionals under Section 44 ADA is increased from 50 lakh rupees to a higher amount. Now, if we move now towards the GST side of it, we have seen that the limit for threshold exemption is just 20 lakh rupees. That's a very low amount, and that's there from 2017. So I think certainly the government must look into increasing that threshold limit for registration and for threshold exemption. The limit must be in the range of 40 lakhs to 50 lakhs, because if you see 20 lakh rupees, the 20 lakh rupees per day means only 5,500 rupees a day, and which limit is very, very low as we speak. So I think that's what needs to be looked. We need to look both the exemption limit, which must be raised, and last but not the least, there are certain arbitrary provisions when you order food from a dhaba, which have become taxable now if you operate from an e-commerce operator, or for that matter, if I use an Uber app to book an auto rickshaw. These are important services which are being procured by middle class. And if you want to digitalize our economy, if you want to digitalize the way we perform and do businesses, I think these exemptions must be there, because if I order food from an online delivery platform, then it becomes taxable. Whereas if I order food from this dhaba directly, it is not taxable. Similarly, when it comes to auto rickshaw, when I book it through an Uber app, it becomes taxable. And if I go down my building and take an auto, it is not taxable. So all of this is impacting to a very large extent the middle class income group.
Right. Yes. Yes, absolutely, Abhishek. You've pointed out a lot of important aspects, and like we know, every year the expectations are especially high, when it comes to the budget. But, realistically, this time round, what do you think can actually come in? What is realistically possible given the pandemic, and what, the amount of room that the finance minister actually has to make all of these, exemptions and ease the burden on the taxpayers? What is your view?
See, I think the finance ministers in last 8 years have been very pragmatic. Let me be very frank. There needs to be a proper balance between the revenue collection and the benefits which have to go to these sectors. I think pragmatically, it will be important to give the benefit to that class of salaried income group people, which reduces the compliance burden and which reduces the impact of tax in such a way so that the larger benefit is going to them and the consumption increases. So I think if that happens, then it will be a win-win situation for all. So for example, if you see the GST threshold exemption limit, 20 lakh rupees, if you increase that limit from 20 lakhs to 40 lakh rupees, a large number of GST taxpayers will go out of the compliance burden. And the tax collection will not go for a toss because they contribute significantly less in terms of the tax contribution by way of GST payments. Similarly, if you look the income bracket of 5 lakh rupees to 7.5 lakh rupees, that benefit in the larger interest of things would mean that a lot of people will get the relaxation. That amount of marginal tax difference will be substantial for them, and they will have a more borrowing capacity. And I think the finance minister and her office would look into those numbers very carefully. So I personally feel that there will be some tweaking with respect to the basic threshold limits. That number will increase because especially if you are earning between 5 lakhs to 7 lakh rupees, you deserve a much more tax exemption benefit. So I think those numbers are being worked today, and that will come certainly in this budget.
Right. All right, Abhishek, thank you so much for joining us with your perspective. Well, that's as far as the expectations of the middle class, the taxpayers, all of that is concerned. We'll, of course, have to wait and see what finally does come out. But let's now talk about another extremely important sector at this point in time, which we need to look at, and that is the MSME sector. COVID pandemic has not been kind to the sector. Neck deep in losses, the small-scale units are looking to the government for help. In the Pina industrial area of Bengaluru, 10% of the over 10,000 micro and small-scale units have actually shut down because of the impact that the pandemic has had on them. The rest are still struggling to survive. What do industrialists here hope from Budget 2022? Revati gets us this report.
For the last 26 years, Shashidhara Shetty has been running a small-scale two-wheeler service station manufacturing unit in one of Bengaluru's industrial hubs. However, the last 2 years have been tough for him. His business has gone down by 50%, incurring losses frequently.
The major is it's a capital-intensive industry. Like we get business once the two-wheeler service station expansion happens. Due to pandemic, people are uncertain to invest. To start a service station, no, they need a huge investment. People are not ready to invest. When they are not investing, we will not get business. So accept some postponement of bank liability. Otherwise, nothing has been done to the industries in this pandemic. Industries, even we can't even delay by 1 day GST. So they will block the e-way form and all. I thought industry, definitely SMEs, they would have postponed the GST liability by 6 months or 1 year. We would have used that fund and industry would have been benefited out of it.
Other units here that diversified have fared better. From manufacturing aerospace components to hydraulics to machine components in a single unit. But there is a frequent rise in the price of raw materials that isn't matched by what is paid by the clients. And more work does not necessarily mean more money anymore.
Steel, no, earlier 42,000 rupees per ton, but now is 75,000 rupees per ton. But like aluminium per kg is 220, 240 rupees earlier, but now is the same metal 435, 450 rupees per kg. Means it is a, because we take orders, no, it is a 6 months, 1 year we have a POs. But this level of increase, we are supplying, we are exporting components lot of, but they didn't give that price. We supply, we are very busy, but we are facing a lot of financial problems.
A month ago, industrialists from across Karnataka staged a massive protest, seeking relief from rising input cost, demanding a conducive atmosphere for industries to run. Industrialists are also seeking lesser rate of interest on loans in order to have some support in the unpredictable COVID era.
When they can give the 7-8% loan to the house, even we are expecting that at least for some time they can reduce the interest rate, which is going to help us. What they have done is like they have given all the facility. I'm not saying they have not given any facility, but it is after maybe about 2 years, it is going to be burden because they have given holidays for 2 years. After the 2 years, if the situation didn't improve, then we are going to have problems after 2 years also when the repayment starts. So it is always better that they give some real benefit of reduction in interest rate.
With orders picking up, exports improving and life returning to normalcy slowly, days ahead look bright for the industrial sector. But the micro and small scale industries are finding it difficult to pick themselves up after this fall. They look for the government to handhold them at least for a while. All eyes now on the union budget. With camera person Santosh Sugar, Revati Rajwan in Bengaluru.
Let's bring in some more perspective here. Professor Santosh Mehrotra is joining us on the broadcast. Thank you so much, Professor Mehrotra, for joining us. The MSME sector has been one of the most battered amidst the pandemic. There have been efforts and certain schemes, credit lines, etc. announced for the sector. But in your opinion, has any of that actually helped at all? And what do you think, how do you think the budget needs to approach this sector?
It has helped a bit, but I think they're hurting very seriously and therefore more needs to be done. So one of the schemes of that previous budget, earlier from Atmanirbhar Bharat, which was extended in FY22 budget, was the credit guarantee for the MSMEs, the ECGLS. And that needs to be extended because most of the funds from that have actually gotten utilized. Secondly, there's need for more easier credit availability on easier terms given the crisis that the MSME sector is facing. Thirdly, there's a very serious need for the IBC, the terms under the Insolvency and Bankruptcy Code, where large companies have loans to the banks, and when their companies are being liquidated, their dues, outstanding dues to the MSMEs tend to get neglected or ignored altogether because they are categorized in the IBC categorization as operational matters. And the problem with that operational category is that those payments don't ever, they're regarded as operational creditors. And that operational creditor category suffers short shrift. And their outstanding dues are never paid. Now, this is unacceptable given how much MSMEs are suffering. As it is, banks are taking a massive haircut from the IBC process and the liquidation. And they should be recategorized, the MSMEs should be recategorized so they actually get their outstanding dues. It is money that is owed to them. And finally, I hope that the government becomes serious in this budget for the clusters of micro, small and medium enterprises, the 6,500 manufacturing clusters, which provide labor-intensive manufacturing across our country. And there is more money available for technology upgradation, for market development, for design upgradation, and for skill development located in the clusters. These are clusters which provide lots of employment in the MSME sector, and they are spread across the whole country. So cluster development has been seriously underfunded in India, and it deserves much more. But more than specific action for the MSMEs specifically, what the MSMEs and the economy generally is facing is lack of demand. Consumption has been shrinking, and consumption has been shrinking because employment has shrunk across the board. And I think the latest ICE survey has shown that even more, that the bottom six quintiles of the population have seen an absolute decline in incomes. I had myself estimated that poverty has increased sharply. So we hope that the government will show some courage and behave in a Keynesian manner and put in place a fiscal stimulus. Let's remember that in FY21, during the first wave, in FY22, in the run-up to the second wave, the fiscal stimulus size was barely, total fiscal stimulus over 2 years was barely 4% of GDP when the emerging market economies have put in place a fiscal stimulus in the first year, 2020 alone, of 4.7% of GDP. Our government has been extremely stingy, and the economy and the ordinary people of this country are suffering, and they are paying the price for it. Please remember that our contraction in FY21 was among the worst of any country in the world. That was because of bad management of COVID as well as poor economic management and the poor quality of the stimulus.
Yes, absolutely. Yes. Very, very important points, Professor Mehrotra, that you've made there. Let me also bring in Prasad Khopkar of Universal Chemicals, who's joining us to give us a perspective also from the sector itself. Thank you very much, Mr. Khopkar, for joining us. Like Professor Mehrotra was pointing out, the fundamental problem is the lack of demand. And when that is the fundamental problem, credit lines and incentivizing banks to lend to the sector, all of that doesn't really help as much. What is your own view of what the sector really needs right now?
Yeah, good evening, everyone. I absolutely agree with the same. First of all, I would say like for the cluster development, see, that's a very important point. And for the cluster development, I can add that, like we can also have some common facilities. We should have the cluster development along with the common facilities so that the industry members should not waste their energy for, controlling all the factors. Right now, for the industry, they have to struggle, addressing all the issues pertaining to the government licensing, to the manufacturing sector, and the process, they lose the focus of the manufacturing. So if you address all these other issues, like we provide all these facilities, common facilities to the industries, then the manufacturing industry can enhance its manufacturing sector. Second point I can say over here is like we should encourage the technology improvement in the industry. So if you can get some, support in terms of subsidy or something for the technology improvement. And we also need to make this renewable energy more viable. By making the renewable energy more viable, we need to give some tax relief to the usage. At the same time, if we can give some benefit in terms of the procurement or even to the manufacturing sector, that can help in enhancing the renewable energy usage in the industry. The third point I would like to add over here is the employment. Infrastructure spending needs to be improved. If you improve the infrastructure spending, then automatically it will accelerate the employment creation and it will again help in improving the lack of demand. The demand right now, the MSME sector, as rightly mentioned over here, the lack of demand is a very important factor. And if you improve the employment, then definitely that will help in MSME sector for the demand. Thank you.
Yes. Yes, absolutely. Extremely crucial points there as well. But Professor Mehrotra, coming back to you here, like we've been talking about, the demand is one big factor here. And what we've seen, what the past experiences tell us about the kind of packages that have been announced, it has all been, whether it's a credit guarantee, it is all loan-based and credit-based schemes that have been announced. If that were to continue, we've seen that the government is clearly not a big fan of straight-off stimulus being given. How do you think the repercussions of more credit lines and those kind of schemes being announced rather than the stimulus like you pointed out?
Well, this government unfortunately is a captive of neoliberal thinking. When the rest of the world is turning Keynesian, unfortunately they remain very conservative. This is hurting ordinary people and small producers. This cannot continue. The government has to increase capital investment for infrastructure. Why? Because the private sector is not increasing investment. As a result, investment overall as a proportion of GDP is at a low which is not being seen for almost a decade. This is unacceptable. At a time when the economy is recovering, the action of capital investment increasing in infrastructure would be to draw in private investment into those same activities. That's the kind of support needed. And I hope for goodness, above all, that the fuel taxes, the diesel and petrol taxes that the government has gone on raising must be rolled back. If they are not rolled back, how do you expect inflation to come down? You cannot expect inflation to come down, which is biting consumption for a year at least, at a time when ordinary people's expenditures have increased on account of health costs, at a time when joblessness has increased. It's absolutely brutally callous to continue with such high petrol and diesel prices. Do you know that food inflation between July 2020 and July 2021, the RBI bulletin told us in August, was a colossal 31%. And you see, when we say inflation was 31%, that means prices rose by almost a third. And prices don't go back. Then the next thing we hear is, oh, inflation has now come down to 6%. Well, it's inflation on that 31%. That's the point. Just because the rate has come down, that's just showing that there is a base effect. Last time the increase was very high, and now the inflation is lower. Big deal. So, we need people in the finance ministry who understand macroeconomics 101 to be running the finance ministry. No more of this continued immaturity that no one else is actually adopting in the rest of the world. Back to you.
Fair enough. Thank you, Dr. Santosh Mehrotra, as well as both our guests for joining us at this point in time with your perspectives.